Some people have an elevated fear of the IRS, that the IRS SWAT team's going to show up at their house and slap them in an orange jumpsuit and some leg irons, perp walk them down the sidewalk in front of their neighbors, none of which will ever happen. But there are people who are very concerned, right? And maybe they just want somebody else to blame if things go wrong. So they want me to do their tax return for them so that I'll deal with it for them, right?
Welcome to the Military Money Manual podcast, where every episode is all about achieving financial independence in the military faster than before. We believe personal finance shouldn't be boring or intimidating. Building wealth can be simple, and financial freedom is the ultimate financial goal. Now, here's your hosts, Spencer and Jamie.
Hey, Military Money Manual listeners, Spencer Reese here from militarymoneymanual.com. Today on the podcast, we've got Jamie, my co-host, and Paul Allen. Paul Allen's a CFP, Certified Financial Professional, MQFP, Military Qualified Financial Professional, and an enrolled agent, so he's allowed to talk to the IRS on your behalf. He runs pimtax.com, PIMTAX. He's a former Navy veteran, also worked for the Coast Guard a little bit. He gets into his background during the episode. Founding member of the Military Financial Advisors Association, which is designed to connect the best military financial advisors with military service members. And he's also a founding member of the Military Tax Experts Alliance, helped develop the Military Qualified Financial Planner MQFP designation. We've got a lot of great tax topics that we talk about on today's episode, all relevant to military service members and military families. So without further ado, we'll welcome Paul Allen to the podcast.
I wish we were doing more with that group, but for now, it's kind of a slow start. As for my background, I enlisted in the Navy in 1987. I was a nuclear reactor operator, rode around on submarines for a while at a typical military logic. At some point, somebody said, Paul, you're doing that really well, so we want you to go and do this other completely different thing, which is to be an intelligence officer. So I did that for the rest of my career, finished out at about 24 years, and enjoyed both of those jobs, but they were very different. After that, I worked for about 6 years as a government civilian. When you are a military intelligence officer, you have pretty much one job skill, and there's only one employer for those job skills, so that's the U.S. government. So you end up going to work for them. But I was working for the Coast Guard as an intel analyst and supervisor. That was a pretty great job, but I got a little squirmy. I'd always been very interested in personal finance, and I started to think more and more about breaking away from being an employee and starting my own gig also appealed to me. So after many conversations with my spouse about, and running the numbers, we decided that it was a good time for me to punch out. I had already taken all the CFP classes, so passed the exam by this point. I started a tax preparation firm. I had worked previously for H&R Block. It's not a horrible gig working for H&R Block, but I ultimately realized I could provide better value to my clients if I was operating my own firm. So that's what I did. I started a tax preparation firm and a registered investment advisory on the same day. I never get tired of hubris, I guess. Yeah, I mean, that was in late 2015. I actually didn't get the RIA approved until early 2016. Yeah, they were both running. I partnered with Sean Gillespie. I think you know him, in 2018. His office is 25 feet from here.
Nice.
Anyway, so he and I have been business partners ever since. We started MFAA in 2019. We met with some colleagues, of course, many of whom you know and have been on this show, the Military Financial Advisors Association. And just last year, with some additional colleagues in the tax space, we started the Military Tax Experts Alliance, which is a place we hope to encourage more people to get into the tax business and serve military and veteran families.
Where do you see most people needing help with their taxes? Like, what's the number one issue or the top three issues, if you have a list, that military families are struggling with their taxes?
So the common errors that I see, things that people need help with that they're clearly not getting, would be rental properties, because many military families become landlords. And so then they kind of struggle with the tax implications of having a rental property. Currently, I've got a client who's having a heck of a time getting her money back from the Commonwealth of Virginia here. I live in Virginia. She didn't owe tax to Virginia, but she had tax withheld in Virginia, and now we're trouble convincing Virginia to give it back. That's kind of a pain in the butt. And then I would say, generally speaking, there's a growing number or growing percentage of military families where one or the other, or maybe both, are involved in something gig economy like. With a couple years ago, it was driving for Uber and Lyft. That seems to have transitioned to mostly DoorDash now, or Instacart, or Amazon, or something like that, or Etsy, or some kind of multi-level marketing campaign. And the common thread through all of those is they don't know what records to keep. They're not keeping good books and records, and that makes it difficult at tax time. So those are the big ones I see.
Do you have any recommended resources to keep books? Is there any software out there that you wish people were using that's low cost or free?
Well, my go-to in that space forever has been called Wave, because it's been free. And they just like last week announced that they're going to go to a new strategy for charging people. So they may not be free for long. Wave bookkeeping is pretty good. But here's what I tell people. It depends. I have a team of tax preparers that work for me and admin, and they would be terribly disappointed if I didn't start at least one answer with "it depends," because almost all tax answers start with those two words. It depends. So, like, if you're going to keep your books and records, you can do it on a piece of paper. You could do it in Excel or Google Sheets or some other free software, right? Or you can spend a lot of money on a tool that makes it easier. But the bottom line is you have to do it. An analogy I like to make is that, I bought a table saw and I set it up in my garage. And then a week later, I went out there and there was no furniture made. I didn't understand. So it doesn't do it for you. It just makes it easier for you to do it. So if you get QuickBooks or any tool, that you want to spend money on that will make bookkeeping easier, that's fine, but you still have to do it. So that's something that people maybe don't always understand, is that it doesn't do it for you. You still have to do it.
Yeah, I would say as a small business owner myself, I started with just an Excel spreadsheet when it was simple enough. And once I hired a CPA, he was like, I'm not going to do this unless you use an accounting software. And so I transitioned to using Wave Apps, which is free. Like you said, they are transitioning to a paid model, but I think they still have a freemium model. And the paid model is not much. I think it's a couple, $16 a month. But the other one is huge in the space, is QuickBooks. I have used them in the past. I didn't like them as much. I didn't think their integration was as easy as Wave Apps, but you got to do it yourself. You got to or if you keep your own books, you can hire a bookkeeper, but for most people, it's pretty simple. You've got your income, you got your expenses, and you just kind of keep track of it. Get a business credit card, put all your business expenses on there so you can keep it completely separately. And then the other thing I'll mention is a separate business banking account. And one that I've used recently is Mercury. They're a fintech app that's built on top of a FDIC insured bank. They're excellent, super simple. You get a checking account, you get a savings account, and everything just seems to work. They'll open online with the EIN. It's definitely been the best business banking account setup I've seen, because I've tried Navy Federal, and unless you got physical access to Navy Federal, it can be a pain in the butt for business banking, at least. And I've tried Chase, and again, they want to see you in person at least once. But if you're overseas or if you're online, Mercury is kind of my recommendation there.
Yeah, all that was very sound about setting up a separate card, a separate bank account for your business stuff. It's not an IRS requirement, but it is a good business practice and will make your life much simpler if you go down that path.
A question on that, Paul. Does someone that's driving for DoorDash, they need to have, or is it easier for at that level of a gig economy side hustle to have a separate account? Or where's the transition where it's like starting to get complicated if you don't?
I think that I would not, if I were going to drive for DoorDash, set up a separate bank account immediately, because I think probably the average lifespan of a DoorDash driver is 3 months or so. I've run into very few people, and I ask everybody when they're in one of these gig economy kind of jobs, how long have you been doing this? And it's never more than a year. Very, very rarely is it more than a year. So, I don't think I'd go through the hassle of setting up a separate account until were sure you're going to like it. Now, if you have a rental property, I would do that, because a rental property it's not DoorDash. It's not like, I don't like this anymore, I quit. You got a rental property until you take some very positive steps to not have that rental property any longer. which could take months or years. So for that, I would set one up right away. But for something that may not be a very long-lasting job, I don't think I would bother.
I want to back up, Paul, and just define a couple acronyms that we're going to use on the podcast. So CFP, Certified Financial Planner, we talked about that. EA, Enrolled Agent, that's for someone who's authorized to interact with a taxpayer with the IRS. Is that correct?
That's correct. So that's a credential awarded by the Department of Treasury / the IRS. There's 3 exams, a series of 3 exams. They're called the Special Enrollment Examinations. Once you pass them, then they do a background check and a few other things, but then essentially they award that credential, and then to maintain it, you have to get 72 hours of continuing education every 3 years. So essentially 24 hours a year.
And then the other designation you mentioned was MQFP. Can you talk about that real quick? That's a newer one.
It is a newer one. So, and it's one that some friends and I have developed, actually. So it's called the Military Qualified Financial Planner. The reason we developed it was we're trying to solve the problem of how do military and veteran families find the good guys advisors, right? The good guys, advisors, coaches, counselors, planners that are out there. They're out there now. 15, 20 years ago when I was looking, maybe not so many were out there and you found the wrong crowd, we'll say. But now there's more and more a growing population of the good advisors. But how do you find them? Because if you send your military or veteran family off to do an internet search, they are very likely going to find the wrong advisors. So we thought that we would develop a credential, right, which is a label that you put after your name or under your picture to let people know something about yourself. And what MQFP says is that you have a military experience in your life. You either were a service member or a spouse, that you understand military personal finance because we make you take an exam to get the credential that tests your knowledge in those areas. You have a pre-existing credential, AFC, CFP, CHFC are the big ones. Also CPA and attorney if any are interested. And then also that you're willing to serve military and veteran families, and you're willing to sign a fiduciary oath in order to do it. The thinking is once we get enough people supporting this credential, that the military or veteran searching for a financial professional can search for MQFP and find the right kind of person that will be on their side.
Yeah, I think that's a excellent way to differentiate, kind of like you said, the good guys who are going to have your best interests at heart, and everybody else out there who just wants to sell you whole life insurance or index universal life insurance. Not to pick on anyone in particular, but Jamie, it looks like you got a point.
Other than looking for the MQFP designation, what are some warning signs if someone does reach out to a quote unquote financial advisor or a company and they start to get interaction, they start to get sold a product? What are some things or some verbiage that maybe would be like, that might be a red flag. Maybe you should get a second opinion?
Well, if you don't understand what they're trying to sell you, that's, I think, a big red flag. And I'll tell you, my experiences from 30 years ago was I said to the person who was presenting themselves as an advisor that, hey, I want to retire comfortably. I want to get my kids through college and I want to take some family vacations. And they came back with, here's the whole life policy for you. And I was like, I don't understand why that is going to help me achieve those financial goals. So if you don't understand what they're selling you, then there's a pretty good chance that it's not you, it's them. You can ask questions such as, how are you compensated? Do you receive any particular compensation if I take this recommendation and purchase this product from you? You might also want to look through their, if they're insurance brokers, they're regulated. If they're investment advisors, they're regulated. And so there'll be a public record through the insurance commissioner or through the SEC or FINRA websites that you can find out if there's been any adverse complaints against them.
And I'm also going to take this opportunity to shout out the service Nectarine. We had Jeremy Schneider, one of the founders, on the podcast recently. And it's a new service designed to connect consumers with financial advisors. And they also kind of do their own vetting process where it's fee only. And you pay $150 for an hour. It's right now it's $150. It'll probably go up in the future, but it's $150 an hour of their time. And they're all registered investment advisors. And it seems to be a great service. It's getting really good reviews from customers. I'm actually signed up. I'm going to trial it just to see how it is, make sure that my recommendation stands. But I'm excited about the possibility that I can point people there and say, look, they've done the vetting. These are some of the good guys. I think for the vast majority of military service members who don't have a rental property, who aren't doing a side gig, if they're just receiving a W-2 income, if their spouse is just receiving a W-2 income, maybe they need to have an hour conversation with a financial advisor, but that's probably about it. You can DIY a lot of this. And that kind of leads to my next question, which is, I did my own taxes for 10 years before it got to the point where I thought, you know what, I'm not sure if I'm doing this quite right. But when I was just receiving W-2, I was doing it myself. Is there like a transition point where a military service member might think, I've been doing this myself, but I think it's maybe time to bring in some expert help and just maybe have somebody check my numbers?
There's a variety, right? It's not one size fits all. You have some people who, for instance, have, shall we say, an elevated fear of the IRS. And so they're so paranoid that they're going to be, the IRS SWAT team's going to show up at their house and slap them in an orange jumpsuit and some leg irons, perp walk them down the sidewalk in front of their neighbors, none of which will ever happen. But I mean, there must be the visual that goes to their head. So they're very concerned. I advocate a healthy respect for the IRS. They're the most potent collection agency on the planet. The laws and the Constitution are there to constrain their power also. So let's not get carried away with it. But there are people who are very concerned, right? And maybe they just want somebody else to blame if things go wrong. So they want me to do their tax return for them so that if they get a letter from the IRS, they can bring it to me and I'll deal with it for them, right? So then there's probably most people who hit some combination of complexity, concern. There's a range of family income that goes from about $125,000 to about $250,000, $300,000, where it feels like your taxes are going up at a faster rate than your income. And it feels that way because it is so. You lose all of your deductions, you lose your ability to take credits, and your income keeps going up and it's taxed at a higher and higher rate. That eventually levels up. But a lot of people in that range, they've made some changes. Maybe their income's $50,000, $75,000 higher than it was the prior year, but which would be, say, 50%, their income's 50% higher, but their taxes doubled. And they're like, I must have done something wrong. Maybe not, but that's when they're like, I need somebody to do this for me. At least some professional who can look at this and tell me if I've done this correctly.
And that actually checks exactly with my personal life experience. It was kind of around that late 2003 time period where I was, I'm making 6 figures of income. And actually, it was probably when I got back from being overseas. I was stationed in Abu Dhabi for 2 years. So I had 2 years of tax-free income. And so it's pretty easy to do my taxes. But when I get back to Hawaii and back to the mainland and I have to start paying taxes again, and it's like, oh man, like this is a lot higher than I remember. I think that was exactly the time period where I said, you know what, I'm going to go work with a CPA now. And I found it to be quite reasonably priced. I was kind of expecting a sticker shock, but you actually publish your rates straight on your website, which I think is excellent for transparency. So people can go check that out. That's at pimtax.com, PIMTAX.com. And I think that's excellent that you have that level of transparency for future clients.
Well, I thank you for saying that. There's transparency and then there's simplicity. Right, we charge by the form, and so I put how much each form costs up there, but many people have no idea which forms they use, so that it's not always that helpful. If we have time, depending on the time of year it is, if we have time, we'll, happy to step through somebody's return. Like typically what somebody will do is present me with their prior year return, and I'll just say, here's how much I would have charged you to prepare that return. That's pretty easy. Another, back to when people decide to seek professional assistance with their taxes, with military families, is we'll often see multiple state issues. If you have a rental property in California, but you're claiming Texas, but you're living in Virginia, and Virginia withheld your spouse's income, your taxes from your spouse's income, right? Now you got to file in a variety of states. And the do-it-yourself softwares, which are pretty good for most things, tend to really get confusing when you telling it yeah, I know my address is in Virginia, but I am not a Virginian. A lot of people just come in and they're like, I already filed my federal, but can you please do my state returns for me?
Yeah, that's a great jumping off point right there. So let's just talk about that real quick. I see this question on Reddit probably daily, if not maybe weekly, but people are confused about home of record versus state of legal residence. Now, you're not a lawyer, at least I don't think you are, but what is your understanding of the home of record versus state of legal residence and how it applies to filing your taxes?
I'm not a lawyer, but I do like to tell people that I teach at a law school because I teach at Regent University School of Law. I teach the financial planning program there. But you're right, for sure. Home of record is, I don't want to say it's kind of a semantic argument, but almost everybody who says home of record to me actually means state of legal residence.
Right.
So a person will come to me, a potential client or a client will say, and they'll say, for instance, Connecticut is my home of record. Now, I know they mean that Connecticut is where they pay income taxes, right? State income taxes, which may or may not have anything to do with it being their home of record. Home of record is just sort of an administrative term that the military uses to essentially put a check mark, like this is where this person joined the military from. I don't think you can change it if you're an officer. If you're enlisted, I think you can change it when you re-enlist. If you re-enlist in another state, I don't know why you would, but maybe you want to. And it's not used for very much. The only thing I can think of it's used for is like when you separate from the service, you are entitled to a move back to your home of record. And so that's why they need to know where that is, or an equal distance if you choose to go in another direction. State of legal residence is actually the correct term for where your tax home is. But so many people use home of record to me that I kind of know it. I'll just usually ask a follow-up question. Like somebody will say, my home of record is Connecticut. And I'll say, so you pay income taxes to the state of Connecticut? And I'll say, yes.
Right.
And then I know that that's really what they meant.
Yeah. So state of legal residence, tax domicile. So in the example that you gave earlier, like their state of legal residence, their tax domicile is Connecticut. Let's say their home of record was Texas, but that doesn't matter for filing taxes. And let's say they're stationed in Virginia and they go to file, they're using, the free mill tax software that's available on Military One Source. And they go to file and they put in their Virginia address and it says, you got to file a Virginia return. And they say, nope, I'm actually a Connecticut resident. And then it says, nope, you got to file a Virginia return. And they say, okay, fine. And then they do. And then now they come to you and they say, I think I screwed up. I filed a Virginia return and I'm not a Virginia resident. And maybe they even pay taxes. Maybe they had taxes withheld by a state that they're not even, a legal resident of. Is it possible to undo that? And also, let's say that they've been doing this for years. Can you go back and possibly get some money back for them for previous years?
Well, it's not a hypothetical. I see it every year that happens. If it was just the prior year, it can be undone. So you would file an amended, in your scenario, you would file an amended Virginia return to request your money back. And then you would have to file in Connecticut, and you may have to pay Connecticut at the time that you file a Connecticut return if you were supposed to be filing a Connecticut return. As far as multiple years, that also happens. And most states, maybe all of them, but I'll just go with most for now, follow the federal guidance for how far back you can get a refund. And that's essentially 3 years. So currently we can file 21, 22, and 23. Actually, we got at the time of this recording, about 6 more days, we can file 2020 returns and still get a refund. But you can only go back a few years and get refunds for those. But, if you're owed money, we can do it. And I just got somebody back. They had $17,000, $18,000 that they paid to the District of Columbia over a 3-year period. And we filed amended returns there and got it all back. So that's like a big win in tax world. We run around high-fiving. You don't see tax people get excited much, but when you get client that kind of money back, we get a little giddy.
Well, and I think that right there is the prime example of let's say that return cost that person $1,000, right? And you were able to do the work for them. That was money that was owed them, right? They could have filed the return themselves and figured it out. But, what a burden, a lifting of a burden to say here, smart tax person, take my money, figure this out. And you get to call them up and say, guess what? You're getting a $17,000 direct deposit coming. That's wonderful. I mean, every military family could benefit from a return like that or a refund like that.
So they actually had their returns professionally prepared in DC. The military service member was stationed in DC, and they had a DC professional preparing their returns, but they selected somebody who was not familiar with military, and that led to this problem for the taxpayer and their spouse. This was sort of the impetus behind some of us forming this Military Tax Experts Alliance, which is a new organization we're trying to get off the ground right now. Because if you're military and you have those, there are some very specific military tax rules that many people don't know if they don't have any military experience or exposure. So we're trying to get this organization off the ground so that we can bring more people into the profession, and we can also provide greater service, or at least a place where, like, somebody asks you, hey, I need just somebody to do my taxes that understands military stuff. You say, hey, go check out this Military Tax Experts Alliance website. You can find somebody there.
Yeah, that's great, because we definitely need that. Kind of like how we can refer people to MFA when they need a CFP or that kind of help with the military expertise.
Just a quick note from one of our sponsors, and then we'll be right back to the show.
It's no secret Spencer and I are both huge fans of the Thrift Saving Plan, the military's version of the 401k retirement plan. We've both been investing in the TSP for over 14 years and are thrilled to announce we've consolidated all the information you need to know into a new course called the Confident TSP Investing Course.
That's right. The course is a comprehensive guide to navigating the TSP, breaking it down to easy, bite-sized chunks that lay out the basics of the thrift savings plan, the funds available, and the investing strategies so you can build wealth while you serve.
We both know what it's like to be a beginner and to be overwhelmed with all the information that's out there about investing in the TSP. Head over to militarymoneymanual.com/TSP, Tango Sierra Papa, to find our simple breakdown of all you need to know. You get lifetime access, and we'll have a growing library of content. And one of my favorite parts about the course is that for every course we sell, we're going to be donating one to an E4 or below.
Yeah, I love that feature of the course, Jamie. So if you're an officer, an NCO, a senior NCO out there, and you purchase a course, first of all, thank you. And also know that you're helping a fellow service member, a sailor, a soldier, a Marine, an airman, a guardian, a Coast Guardsman, E4 or below, take one step closer to their financial success.
The link's in the show notes, or head over to militarymoneymanual.com/TSP, where you can sign up for the Confident TSP Investing course. Now, back to the show. One of the things that I've dealt with personally, as my wife has been on and off of W-2 income over the years, a lot of times, especially with the newer rules for military spouses over the last couple of years, the HR department at their company doesn't understand the allowances for military spouses. And a lot of people say, oh, fine, I'll just let them take out Virginia or Hawaii or California taxes and I'll settle it when I file my returns. Is that an okay strategy, or is there a better way to advocate for yourself when you're filing your paperwork with HR?
So I was raised by Midwestern Lutherans. Inefficient use of money really just sticks in my craw, right? And that is inefficient use of money right there. I would try to fix it if I could. Let me try and do like an example of one that I ran into recently. Again, I'm in Virginia, so military couple living in Virginia, but they're claiming Louisiana. And Louisiana does, in fact, tax their incomes while they're living here in Virginia. Okay. She went to her HR or her employer and said, can you withhold Louisiana taxes for me? Now, that's actually two questions. It's, can you withhold Louisiana is one, and the other is, can you turn off Virginia? And the employer is unlikely to withhold Louisiana for you, and they're not required to. If they're not a Louisiana employer, if they're a Virginia employer, they're only required to withhold Virginia. And they might not want to withhold Louisiana because it costs them extra money. I know this because I have employees in 6 states, and it costs me extra money to have their taxes withheld in their state where they want to have it withheld. But we do it because we're trying to be military friendly here. Anyway, the employer might not want to turn on the Louisiana withholding. That does not mean they can't turn off the Virginia, though. And they can. Every state that I've ever looked for a state equivalent of the W-4 form has one. In Virginia, it's called the VA-4. In Missouri, it's called the MO-4. Go figure. I think in Hawaii, it's the HI-4.
I think it is.
So you, the Virginia one in particular you fill it out, and there's a checkbox on there that says, I am exempt from Virginia taxes because I'm a military spouse and I live here because my service member has orders here, or something to that effect. You check that and hand it to your employer, and they're required to stop withholding Virginia taxes for you. Now, that doesn't fix your Louisiana problem. You may want to make estimated payments to Louisiana so that you don't get stuck with a big tax bill at the end of the year. That's a different set of circumstances. But it's really two things going on there. So you can and should get that Virginia withholding turned off. You may or may not be able to get the Louisiana withholding turned on, or the state that you prefer.
I didn't even consider that as an option, just turning off the withholding in the state that you currently are. That's an excellent idea there. And like you said, you should do that, because at the end of the year, you're going to settle up with them and they're going to say, you were not a resident, you don't owe us taxes, so here you go. For a military spouse, military service member who's stationed away from their home, it is frustrating that they're going to have to be on the hook for the state taxes that they're not a resident of. This is all in the context of the Service Member Civil Relief Act, the Military Spouse Residency Relief Act, and I think it was the Veterans and Auto Benefits Act.
We all remember it's got veterans and auto in the title, but the rest of it.
Yeah, the rest of it I can't remember. Kate Horrell actually knows the name of the act. She was on the podcast recently.
This does not surprise me that she knew.
Yeah, she has an excellent understanding of the MSRA. But it's fascinating that the last couple of years and the last 2 years are when we're really starting to see kind of this, almost free for all. And I'm still waiting for the IRS to come out and issue guidance where they're saying, okay, yeah, like this is the intent of the law and this is how we're interpreting it, which is a military spouse can declare the residency pretty much of the service member, where they're currently stationed, or their previous home of record. Is that right? Those are the three choices?
Yeah, and that the spouses, which we say home of record, but state of legal residences, new. That's the new one under this Veterans Auto or whatever act that just came out. And I just actually filled one out earlier today for somebody who we're going to claim her. She's got a Florida driver's license. She's a Florida resident, but she's here in Virginia. Her service member is actually from Puerto Rico, but she's claiming Florida, and she had Virginia withholding. So we're trying to get her Virginia withholding back. Yeah, back to, when the whole thing, a couple of things come to mind here. One, I know Kate's has written recently, we'll say, about the Military Spouse Residency Relief Act is not what it's called. The overarching, but when people use that, I know what they mean. They're talking about the sort of combination of laws that protect military spouses from state income tax or give them certain rights and benefits under state income tax. But they're all modifications to the Service Member Civil Relief Act that now start to include spouses in there because, when it was written back in the 40s, most spouses didn't work. Mm-hmm. And so it wasn't an issue. And now we're finding 80 years later that we have to add that in. If Virginia, again, I'm picking on Virginia, my home state, because this is the one I see the most. But if Virginia if you had taxes withheld in Virginia, it's not really Virginia's fault that your employer sent them money, by the way. If you had taxes withheld in Virginia and you don't owe taxes to Virginia, the best outcome at the end of the day is that you'll get it back in 2 or 3 weeks after you file. And we see that the majority of the time. The second best is that Virginia will say, we have questions, or you didn't include the right documentation, or we don't like the copy here. It's not very clear. I see all of these things. And then we answer that and we get your money back for you in 3 to 6 months. And then I've got a few every year that Virginia's like, I don't think you qualify under that. And it's like, what would you like us to send you this time so that we can prove? And then it could take years to get somebody's money back. And oh, by the way, I don't work for free. So you can file that form yourself if you want, but it's confusing and paying me is not efficient. Bottom line is, again, I'm on my soapbox here. If you don't owe the tax to the state, don't pay it. Don't let them have it in the first place. It's just so much easier. You'll get the right outcome in the long run if you just don't let them have it.
Yeah, exactly. And the other piece of that I see is when I've got a young airman working for me and they've got Kansas state of legal residence. And I'm like, weren't you stationed in Texas? And they're like, yep. I'm like, don't you intend to reside in the state of Texas upon completion of your military service? They're like, yep. I'm like, why are you not a Texas resident? Do you have a Texas driver's license? Do you have a Texas address? When you can start establishing a tax domicile in a no income tax state, it's very difficult as a supervisor, as a leader, to watch them pay, even if they get it back when they file their return, because the state doesn't tax, out of state military service members. it's frustrating to watch, a large portion of their paycheck go to the state of which they don't intend to reside in after completion of their active duty service. And so if you're out there and you're listening and you're a supervisor or you're a commander and you've got troops under you, please sit down, review their LES and talk to them. Like, do you care enough about this state to fund their roads? Or would you rather keep more money in your paycheck if that opportunity presents itself where you can establish tax domicile in a no income tax state?
I want to go back to the gig economy conversation earlier and connect it to the state tax withholding conversation that we were just having. When we had Kate on a couple weeks ago, she did a really nice job explaining how, as the active duty service member, my side hustle or gig economy job is not as tax advantage of our spouses now, which is interesting. It's same with rental property. So if you have rental property, you have a side hustle, it can get really complicated on the tax, especially state tax side. But a lot of times we see influencers or people online that are like, once you have a rental property, everything's a write-off. You can write off your Wi-Fi, write off your cell phone, write off your vacations to go back to visit your rental property at your last duty station. What do you say to someone who's kind of getting influenced in that direction, thinking that everything's a write-off? And you might actually have orange jumpsuit IRS interactions if you're not careful with this, maybe.
Within reason, it has to have a legitimate business purpose, right? It has to be an ordinary and necessary business expense. That's a great term of art the IRS throws around. Ordinary and necessary business expense, right? So if you're, again, here in Virginia and you have a rental property in San Diego, completely reasonable that you would have to go to San Diego from time to time and inspect your property and make sure, nobody's running a meth lab out of your basement or that, the place hasn't burned down and nobody's bothered to tell you. So that can be incorporated with some other things you might want to do while you're in the San Diego area, right? Within reason, you could do this. Don't just think that everything's a write-off. And I actually have had this conversation twice in the last 2 years, two different clients that I don't think know each other at all. But both of them set up an LLC. So they went to, it's pretty easy to do. You go to Richmond and pay $100 and get your LLC in Virginia, which is what this person did. And then they bought a Tesla and wrote it off as a business expense. And I'm like, well, how much did you drive for business? Well, I didn't. Okay.
I've seen that TikTok. That's literally what they're saying to do out there.
It's not owned by your business. It's used by your business that makes it a tax write-off for your business. So if you're not using it in your business, that's going to go back to haunt you. And I've seen the social media posts that say, yeah, you can write off everything and real estate's, the best thing ever. And, take 3-stroke off your golf game. All you have to do is invest in real estate, right? Yeah.
Yeah.
All the things, mailbox money, just kick back on the beach, which is strange. And even stranger is that the IRS refers to it as passive income. And I don't know anybody that works harder than landlords. They're especially ones that are first starting out. I mean, you're struggling because the profit margin is, it's competitive. So the profit margin is pretty low on most properties that the military families are turning into rental properties. Anyway, back to your original point, which was, writing off things. Yes, within reason. If you're using your cell phone to talk to your property manager and talk to your tenants or to talk to line up contractors to do work on your property, yeah, all that is a legitimate, ordinary, necessary business expense. And that part of your cell phone bill can be written off. Same with if you're, like I said before, if you had to travel back to see the property, you just have to use some sense. It's not a free-for-all, just like start dumping expenses onto the rental property and thinking it's going to be okay.
We'd like to ask this question to a lot of our guests is, when's the time, focused on taxes now, when's the time where complication in your career, pay level, or rental properties where you need help and maybe have a CPA do your taxes for you?
Well, the first point I want to make on that is that it's not do your own or have a CPA do it, right? So it's sort of like saying, do you want to walk to work or you want to take a Cadillac Escalade to work, right? There's some middle ground there, right? There's bicycles, there's Honda Accords. Well, see, I'm not a CPA. I have to point that out because it is illegal to hold yourself out as a CPA in every state in our beloved union. So a CPA, we'll say, is the Cadillac, right? And it comes with a lot of functionality that you might not be using, right? So the A in CPA is accounting. And, unless you have a business and you're using your business analytics, your budget numbers, and everything, you're doing analysis of your business. This is where an accountant really can prepare those financial statements that let you understand how to improve your business performance, right? Most people that come to me, right, are military families. They've got a rental property. They've got maybe a side hustle, DoorDash, as we've said before. And they are simply doing bookkeeping to have compliance with the tax code. They're not trying to analyze their business to see how they can eke out some more profit margin. They just are trying to file a tax return, stay out of trouble, and just keep on going about their merry way. So there's some steps in between doing it yourself, like going completely solo and then going all the way up to CPA. So there's Military One Source is a great resource for military families. I would hit them up. If you think like, if you're looking at trying to do your own tax return and you're like, this part's a little bit confusing, you can get answers from them, or you can get assistance from them. They'll usually do you right. There's many bases. It's hit or miss around here now in the Hampton Roads area where we have a lot of military bases. And some will have VITA, right, the Volunteer Income Tax Assistance every year, and some do not. Those can be good just to get some questions answered. Then you can use a tax professional such as myself, who is not a CPA, but is versed in taxes, making sure your tax returns get filed correctly. And then again, if you're all the way to the extreme, maybe you like the Cadillac Escalade, you want to take it for a spin, you enjoy that. So, you get yourself a CPA and enjoy the ride.
Paul, thanks so much for joining us on the podcast. Are there any free resources you want to point people to if they want to DIY it, and then if do their taxes themselves? And then where can people find you if they say, you know what, this Paul guy sounds like he knows what he's talking about, and I'm sick of having to file 3 state income tax returns every year for me and my spouse. I want to offload that work onto Mr. Allen here.
You can find me at PIMTax, PIMTAX.com. You can get in touch with me there, and I also hang out on LinkedIn quite a bit. I'm not very active on other social medias. I'm an old guy. I'm past my prime on social media. I think we've talked about Military One Source is a great resource, the VITA opportunities that are out there. I'm probably not the best resource on free resources since I'm actually in the business myself. Not that I discourage people from seeking those out. I'm just not that well versed in them.
Gotcha. Well, thanks again so much for joining us on the show. Like you said, pimtax.com, listeners, if you want to check it out. Lots of good stuff Jamie covered on the show. Talked about using accounting software if you've got a side hustle. Military Tax Experts Alliance. We'll make sure we get all these links in the show notes. MFAA, Military Financial Advisors Association. Love that we're doing an MQFP, Military Qualified Financial Professionals, so that we can help identify the good guys out there and make it a lot easier for fellow military service members to get assistance or to get advice along their journey to financial independence, financial freedom. Paul, thanks again so much for joining us. If you've enjoyed the show, listener, 5-star review on Spotify or Apple Podcasts is the best way to say thanks. And we'll catch you in the next episode of the Military Money Manual podcast.
Thanks so much for tuning in to this episode of the Military Money Manual podcast. If you're enjoying the show, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. This helps others find the show, and we really appreciate it. Thanks again for tuning in, and we'll catch you in the next episode.
The views and opinions presented here are those of the speakers and do not necessarily represent the views of the DoD or its components. Reference to any commercial products or services does not constitute DoD endorsement of those products or services.